Hello traders, this is Blake Morrow and you are listening to the week ahead video for October 20th, 2019. Boy, do we have a lot to talk about. But before we do that, I just want to mention if you have not tried out ForexAnalytix, make sure you do so. It's only $1 for 10 days for the full package of ForexAnalytix. Now, if you are more sensitive to the price and you're like, the premium price, it's $120 a month. I'm not sure if I could do that. Well, we have a light version that's $19 a month that gives you all the basic analysis. You can still download the app. You still get the notifications on your mobile devices. It's a really good package for those of you that cannot really afford at this time the full version of ForexAnalytix. So make sure you try out either one. But when you do try us out, and it's only $1 when you do try us out, you're going to get the full package to try out. So make sure you do that, and let's get started with this next week's analysis. And by the way, this is the data flash here, something you get complimentary with ForexAnalytix. I'm going to move it out of the way because we don't need it there. Okay, obviously a lot of big news over the weekend with Brexit. The Brexit the Letwin amendment was passed, which means that there's going to be a delay. There's going to be a delay. Boris Johnson had to ask for an extension. The EU has not granted them an extension until after see how the House of Commons votes go Monday or Tuesday. But it's basically the EU is going to extend them if they need to. That's positive. The negative for the cable is that it did not pass. The Brexit deal did not pass, and there might be a little uncertainty when the market opens here later today. This is Sunday, so it's when it opens here in probably the next 5 or 6 hours, depending on when you're watching this. The pound's probably going to open a little weaker. Now, if you're expecting big dollar strength, I would be very careful about that. Okay, so, and I'm going to talk about that here in a minute, but let's finish up with the cable. First of all, the cable it rallied pretty substantially, and we rallied right into the weekend, and we had a very accelerated move. And these moves are always quite worrisome, especially when you have like a what could be an AB equals CD type of move, maybe even a little stretch. All right, I would assume that the cable might pull back a little bit, but there is still hope and there is still optimism, and I think the pullback might be fairly minor. Now, when I say fairly minor, we might be down 100 pips, we might be down 150 pips in the cable, but if you're trading the rest of the dollar pairs, don't get wound up about that. Now, as far as the cable goes, and I guess I need to continue to finish up with the cable as far as the price action here, I think we could see a pullback towards 128. I think that's realistic with just some uncertainty. There's a lot of, press, whether, depending on what news outlet you're reading, whether the Brexit deals, if Boris Johnson has enough deals to pass it through in the next couple of days. Like I said, it is quite confusing. There are the amendments that have stalled the vote, but overall everybody's trying to get a deal done, and so you gotta err on the side of optimism at this point. So even if there is, and let me pull something up here, and I'm going to come back to the boon, so just bear with me. So as far as the cable goes, we are very stretched. Look at the daily RSI. I would assume that the RSI tries to reset, so a move back here towards 128 seems very logical to me. 28, 128, 127.50. This would be a logical area of a pullback, especially going into the votes early. The Brexit vote again going into Monday, Tuesday. But like I said, don't get too wound up in overall dollar strength if we see it, because you have to imagine the dollar is really breaking down against everything. It's not just the cable. I think the cable kick-started the move, but when you look at like the euro dollar has broken out of its descending wedge, long-term descending wedge. You can see it in that pink right here, that pink trend line. That's a big deal, and the 200-day moving average is not very far away. And on top of that, if the cable comes down, I think it could be a function of the euro pound. Let me get over to the euro pound really quick. Some euro pound strength. We could probably see a bounce in the euro pound where the euro pound recovers some of these losses back up towards 88 pence. That in itself could support the euro dollar. And again, it's not just the cable. It's not just the euro. Look at the Aussie. The Aussie has had a hell of a recovery off of these lows. We had a nice base here, that 68.80. I don't know if you guys recall how many times we spiked down there. All right, we reversed, broke a trend line. I mean, the Aussie dollar looks like it's going back to 70 cents. Does the Aussie look like it's going to 80? No. But we're still in a recovery here. Look at the Kiwi. I mean, this has been a pretty massive move too. Nice base, inverted head and shoulder pattern setting up. Actually it's breaking out. There's a shoulder head. Neckline's right there. I mean, that points to 64.20, which is key previous support. That should be good resistance, but really 65 cents. Right? So to me, it looks like the dollar still has some downside here. I want to go back to the euro really quick. If you go look at the euro dollar and look at the relative strength isn't on here. This isn't my. If you guys don't know this, I'll tell you right now. For those of you that do, you're going to hear it again. I do the analysis throughout the course of the week. So throughout the course of the week, I do the candlestick and basic technical analysis for ForexAnalytix. Every day. So your daily analysis. I also do a lot of intraday updates with the rest of my team. But every night, Monday, Tuesday, Wednesday, Thursday, I do the basic technical analysis and the candlestick charts. So this way you have my analysis throughout the course of the week. Over the weekend, my team takes over. And puts up their charts and their analysis over the weekend. So therefore, I have to show you my chart really quick as far as the euro goes. But look at relative strength in the euro is what I wanted to point out. And let's go over to the daily chart here. Relative strength is not overbought, and believe me, we can become more overboughter. Is that a word? I don't know, but I'm gonna use it anyway. It's not a word. I'm just using it anyway. We have had more overboughtness in previous sessions and previous years. Yeah, I made up that word too. But take a look at relative strength. So if you're like, oh, it's almost overbought. Yeah, well, you know what? We've been overbought before, and we've been plenty overbought before. So moving up towards this type of resistance on relative strength, up towards 80, 81 is not uncommon. And based on positioning in the euro and based on the reversal we've seen out of this descending wedge, it wouldn't surprise me if we do see 114 and relative strength sees 81, 82. You guys thought I was joking about those tweets that I sent out last week, but I wasn't. There's the 200-day moving average comes in at 112. So the euro may gap a little lower with the pound come Sunday night, Monday morning, depending on where you're at. I'd probably be looking for the euro to fill the gap. Will the cable fill the gap? I don't know. I think there's obviously some uncertainty surrounding the Brexit, obviously, over the next few days. So if I was like long the cable, I'd probably be going, I don't know if I really want to hang on. I might want to shore up some of those positions just in case. But as far as the euro goes, it may gap down a little bit, but I would expect that gap to be filled. And you might see that in the Aussie and the Kiwi as well, and some of these other dollar pairs. Like I said, the dollar is it's moving as a whole. I mean, let's take a look at the dollar yen. So the dollar yen, we closed. That's not the chart I want. Where is it? There we go. The dollar yen closed below that 108.50. Oh, that's not the chart I want either. It's right here. All right, we closed below that 108.50, and the dollar yen has the ability to move lower. Look at the dollar Canadian. The dollar Canadian looks extremely weak here. we've broken some, nice trend line supports. It looks like the dollar Canadian's going down to 130. The Swissy looks extremely vulnerable at this point. As you can see, the Swissy broke this nice little channel. We have a long-term support that comes in around 97, or maybe it's around 97.50. Let's pull that up really quick. You'll see it, and then it's going to take me a little bit to zoom in. All right, ready? All right, here's a daily chart, long term. When I say long term, 2011 low, right? Spike low 2018. We probed it in August, right here, this trend line. That comes in at 97, roughly 97.50, 97.60. Okay, it looks like we're going back there. And again, this is not a pound or cable phenomenon. This is a dollar move, guys. It is a dollar index move. And for those of you that haven't seen the dollar index and what it looks like, the dollar index looks vulnerable. I mean, we are below the, we are now, and this one hasn't been updated yet. Our team's still updating all these charts, so I gotta sometimes do some of my own work here. So we are below the 200-day moving average. We're below the descending wedge. When you take a descending wedge move, all right, a descending wedge move. Let me do a little work for you here. I'm going to keep that 161% extension up there. I'm going to delete this fib. Now, the minimum extension I look for whenever we're coming out of a descending or an ascending wedge, in this case it would be an ascending wedge, and just so you know, it's my favorite chart pattern. It's my favorite reversal pattern, okay? And actually, let me make that a little bit more visible. So the 38% retracement out of the ascending wedge for the dollar index takes us down to 95.30. Can we go beyond that? Sure, we can. I see a lot of these wedge breaks. We'll see the 618, all right, which would take us all the way down to 92.60. I think for me to try to forecast something like that's going to happen without more evidence is a little silly. But I could say that based on positioning, based on what could happen with maybe some risk aversion, we see some the dollar positions get unwound a little bit, which have been very one-sided this last year. This volatility compression that will break out or is breaking out right now. That would take the euro towards 114. Dollar index down towards 95. Not too big of an issue. Can we surpass that? Can the euro go to 116 or something like that? Well, that would mean the dollar index has to drop down towards the 50% retracement. That is also viable, but I'm going to need some further macro evidence on why that's happening, whether it's the FOMC, some expectations start to shift, or ECB expectations start to shift a little bit more, which we monitor on a daily basis. Then that might give me the belief that we're going further than that. But I think for right now, a 38% retracement seems like a very doable target right now in the dollar index, and so that in itself puts the euro, like I said, above the 200-day moving average, probably closer to 114. Realistically, and actually we could do the work right here. The 38% retracement of the euro dollar, as you can see, is right here at 115.30. All right, so that is above 114. That's if the euro continues. Now, one last chart I want to bring up that was on here when I switched over the charts was the Bund. As boons continue to come down, we're at the 50% retracement, and in my opinion, boons look like they're going to retrace a lot of this move. Maybe back down here towards 170 and a half, towards the 618. That means German yields are rising, and that could also in turn affect the euro dollar a little bit more as yields go up. The euro might continue to strengthen. So the boons is another place that you should be, keeping an eye on. It's not just the currency market. So obviously we have a lot of dollar moves that are brewing. One of the other things I guess I should mention to you guys really quick is, watch stocks. I mean, the S&P is, we're up here up against, our 3,000 level. We obviously have seen some movement since this is Thursday's chart, but it doesn't matter. You guys know that all of this big resistance up here around 3,000 is a big deal, and S&P futures might come down a little bit, but I don't see Brexit really affecting the stock market all that much. But if Brexit gets done, the S&P could break above this 130.20 and hit major trendline resistance, which is at 130.40. And you guys know that this is just a big huge resistance up here. You can see that pink or fuchsia trend line. That takes us up about 130.40. All right. A lot of people look at this as a big, megaphone pattern. Maybe, megaphone pattern suggests that we're going to the bottom of the megaphone. Well, you know, if I would add $1 for every person that had told me that the S&P is going back to 2,200 right now, over the last year, I'd be extremely wealthy. But this is, we have to see a lot happen before that happens. But what I do think is this upper sloping trend line here will cap rallies. So even if we get to 130.20 and we break out, 130.40, 130.50 is probably going to stall the S&P near term. So a couple things that just looking ahead into next week, just so you guys know. Let me move this out of the way. Well, this way you can see all the tools, calendar. If you guys want to know, everything that's happening for the entire week, you can follow along with me right here, and you can, look at investing.com's calendar. These are all of our updates and alert histories, and your Twitter feed that's customizable. Sorry, I'm getting in the weeds here. Let's talk about like next week. So there are some data points next week. Even though we're all focused on what's happening with Brexit, we're all focused on what's happening with the dollar. We have Canadian retail sales on Tuesday, which if you are trading the Canadian, which by the way, I haven't been trading the Canadian. The Canadian to me has been very sloppy trading. I've had a difficult time trying to figure out what a good overall direction to trade or the dollar Canadian is. And you can see really, for the entire summer, I mean, it's been very, very, sideways. We are trying to break down right now, obviously, but we have Canadian retail sales on Tuesday. I'll leave the loony to you guys because like I said, it's for me it's a little bit been a little bit tougher to judge direction with it. As far as Thursday goes, we have a lot of European PMIs. So for those of you that are trading the euro, I mean the euro looks bullish, right? We've got this really massive move in the euro, and I'm assuming. Let's just make an assumption, or let's just assume that I'm correct here. Let's say we're trading towards the 200-day moving average, which is 112, up, above, below, somewhere around the 200-day moving average, around 112 come Thursday, which seems logical. Let's say we gap down a little bit. Sunday, Monday, we fill the gap. Tuesday we continue to rally. Wednesday we may overshoot the 200-day moving average. Then we consolidate around the 200-day moving average coming into Thursday. Then we have PMIs. So we have, all the German manufacturing and service PMIs. We have French, Spanish, Eurozone PMIs. Then we have the ECB on top of that. So a lot could really move the euro come Thursday with all of the manufacturing and services data coming out, then the ECB, which is going to be interesting. And I believe, if I'm not mistaken, this is Mario Draghi's last hurrah as ECB president before Lagarde takes over. So it's going to be a good press. It's going to be a good ECB meeting. So before you get too, you know, lost in the woods, like technically, and you go, well, the euro looks like it's going to 117. You know, I'm sure of it. Well, you know, let's get past Thursday first, and let's get past this Brexit news at the beginning of the week to really figure that out. But I do believe that Thursday is going to be a mover for the euro dollar. Okay, and then we do have German IFO business sentiment data that's coming out actually on Friday, which is not as relevant, obviously following all of Thursday's European dump data. So not a lot of data for the U.S. In the next week, but that's okay. We're going to be focused all on European currencies and what's happening in the eurozone and with the UK. So, guys and gals, remember if you have not tried ForexAnalytix, make sure you try it. And again, for those of you that are more sensitive to pricing and you're like, yeah, I just really can't afford that. That's fine. We got a light version for you, so you could take advantage of that. And it's $19 a month, so just try it out. And if you found this video useful or helpful, maybe even funny at times, I don't know if I gave you any reason to laugh, but if I did, give us a thumbs up. My team really enjoys when you like our videos, whether it's our interviews or these week ahead videos. So if you're on YouTube, give us a like button if you liked it, and then also subscribe to our YouTube channel so this way you don't miss any of our interviews that Dale Pinkert does throughout the course of the week. He has such great interviews and brings in a lot of neat people, traders, economists, CNBC personalities, and he'll chat with them for 20, 30, 45 minutes, and it's great. So make sure you listen into those, and if you don't want to miss them, just subscribe to our YouTube channel so this way you're notified every time there's a new one. So guys and gals, have a great remainder of your weekend. Good luck this next week. It's going to be volatile, and my name is Blake Morrow with ForexAnalytix. Have a wonderful rest of your day.